Yeah, if you look at the look at the entire crypto ecosystem, you've got digital property, digital currency, and digital securities and digital platforms. And they all have a different regulatory overhang and regulatory risk. But the least risky of these things is digital property. Bitcoin's the dominant digital property. It's common property. It's not a security. It's acknowledged as not a security. That makes it ethical for a public official to endorse it without a conflict of interest. If you're the mayor of Miami, or you're the governor of New York, or you're a senator or congressman or the head of a country, and you stood up and said, I think everybody should have a chicken in every pot, a farm, a house, some land, and some Bitcoin. You just said the same thing. You said, I'm endorsing food is property, land is property, house is property, a synthetic digital asset is property, live happily ever after. You know, it's a better store of value than the US dollar, than the peso, than the bolivar. So I think Bitcoin has got some clarity there. If in the use case is property, buy it as property. If you sell it or transfer it, you owe a capital gains tax, a loss, a gain, or whatever. That's been decided. Are there other digital properties? Well, I mean, the Bitcoin forks are 1% of Bitcoin. They've failed. There's a lot of question about, is there any other digital property? I would not endorse any other digital property other than Bitcoin, because everything else is murky. Now you go to digital currency. Well, you've got a lot of digital stable coins. There's 17 or 18 stable coins. The digital currency that's one is the dollar. If the world had its way, we would have $1 to $10 trillion worth of digital dollars circulating. Why aren't they? Well, they need to be endorsed by the banking regulators. If JP Morgan issues a digital dollar, they could issue $1 trillion worth of it. Like that. Because the use case for the digital dollar right now is offshore settlement of crypto trades and people that don't trust their own government and their own banks. If you're in Turkey or Lebanon or Argentina, a short story, I have $1 million in an Argentine bank. I'm worried about the peso. They're pegged one peso to the dollar. On one night, the government sends a fax machine, a fax memo, and they convert everybody's dollars to pesos. The next day, they devalue the peso 10 to 1. The next day, they hand me back 1/10 of the money I had, and that's under a capital control. That's what happens in a government, in an environment where you don't trust the bank. So people that are concerned about that, they want to own digital currency. They want to swap their lira or their Lebanese pounds or their Argentine pesos or their bolivars to Tether or to a Circle or whatever stable coin. But you're not going to see Amazon and IBM and Microsoft do tens of billions of dollars of cross-border remittances with a stable coin unless it's issued by an FDIC insured institution. So corporate treasury usage and retail remittances require a government endorsement. And so I think with digital currency, we're waiting for that government-endorsed digital currency. When El Salvador endorsed this stuff, you saw 3 million people download a wallet within 4 weeks. Mm-hmm. And that's half the country. So I think that there's a demand for that, but there's a question of who can issue a stable coin. Do you need a money transfer license, a state banking license, a federal banking license in every country? What's the KYC, etc.? With regard to digital securities, most of the other cryptos are securities. And I think that's been made clear by a lot of regulators. If there's a small group of people and they've issued a token, it looks like an investment contract, you're relying upon the work of others to make a profit. If it generates a yield, looks like a security. We're waiting for more clarity on how do I issue a digital token that's a security, and then what are the liabilities associated with that. I think that that's the biggest regulatory overhang. And then the last piece is digital platforms. Like, what's the innovation of crypto? There's 3 big well, there's 4 big innovations. One innovation is digital property and cyberspace. You could put $100 trillion on the Bitcoin network. Big innovation. I can take $10 million, move it from Rio de Janeiro to Moscow to Beijing to London, and I could never do that with pure property in the history of the human race. That's an innovation. The second innovation is cryptocurrency. The world wants $10 trillion worth of US dollars. If they get it, 100 currencies will collapse, and we'll have a dozen strong currencies that'll exist, and nobody in Asia or nobody in Africa is going to use any currency other than the dollar unless they're forced, right? So that's the second innovation, and we're working to get through that adoption phase. The third innovation is I can issue a token or a security really fast, maybe, and trade it with high velocity. We're waiting to get guidance on, well, how do I issue a compliant token? You know, how do I do that? And then, is there a faster way than taking a company public? The taking a company a public way, I know very well. It takes 6 months to a year. It's a $10, $20 million expense and takes a year, and it becomes a 50-person finance account. It's a $10, $20 million overhead every year forever, right? That's the heavy way, the 20th century way. Is there a 21st century way? Well, we're waiting. The fourth innovation is digital platform, trading this stuff 24/7, 365, and cross-collateralizing it. Does the world want that? Yeah, I mean, they want to trade all sorts of derivatives, and they want to do sports betting, they want to trade digital commodities, they want to trade digital tokens. Is there and what's the example of success? Well, the big offshore crypto exchanges, big example of success, all the crypto tokens. But what's the regulator view? They want to be national securities exchanges. The SEC wants these things to be national securities exchanges and adopt the principles and the protocols of a national security exchange, which means you can't have 20-to-1 leverage. It means you got to have surveillance agreements. It means you got to be transparent. And so clearly, over the next 36 months, it's a 36-month, 40-month. I don't think it gets sorted out in 12 months, but it's over the next 3 to 5 years. This industry needs to go from entrepreneurial, fast and loose, to institutional, regulated, orderly, transparent, private companies to public companies, unregulated to regulated, retail offshore to institutional onshore. And when you're looking at it as an investor, if you're a public investor, a public company, a public official, your safe harbor, your safe place is Bitcoin as property. Not Bitcoin as a medium of exchange, but Bitcoin as a store of value. I'm going to buy it, hold it for a decade. That's a clear place. If you're a tech VC, a crypto venture capitalist, I mean, who's going to dominate stable coins? Who's going to dominate digital platforms? Who's going to dominate, what's the cool, DeFi swap exchange? You can play that, but you have to understand the competition, the regulation, the security issues, and it's a lot more complicated. And if you're a speculator, you're a speculator. Dogecoin versus Shibcoin.